Alright guys, we're going to start off really easy and go over what low resistance liquidity is. What is low resistance liquidity? LRL. That is how you'll see it, so it's just LRL is fine. Low resistance liquidity. So from the previous liquidity video, we covered what equal lows were, what relative equal lows were. So let's just cover that really quickly once more. This would be seen as a relative equal high, as it is not the same level, but these highs are practically in the same range, right? This is what relative equal highs would be. And then equal highs would be an example where the highs are stacked, or the lows are stacked. For instance here, this would be seen as equal highs, because the high was just stacked and we never swept it until this time. Now that you understand that, what we won't do is mark every single high and see it as relative equal highs. Otherwise, we would have all these lines on our chart and it would just be a mess. Remember the example of the trend line and how trend lines form. They create lows and highs, and bullish trends are creating higher highs, higher lows, and bearish trends are creating lower lows, lower highs. And in that sense, it creates this sort of trend line liquidity where it includes all of these stacked highs as one draw. Think of it like this. If price were to come higher for whatever reason, right? For whatever reason, price were to come higher, it would not just sweep one high and then have a reversal. What price is likely to do is come up and take all the highs and then have its move, right? Think of it like this. If I was robbing a bank and there were multiple bills in front of me, why would I take one bill and walk out the bank, right? I would stash all the bills and then walk out the bank. Go big or go home, right? Same with the markets. These institutions are not just going to grab a couple of orders and then reverse. It's most likely going to come and take all the orders before having the real move. So you would stack all this LRL and see it as one complete draw on liquidity. Let's find another example. Here, for example, this would be seen as LRL, low resistance liquidity. All these draws are aiming towards the same area. So if price is given the option to push higher, right? If confluence is stacked and we get the opportunity to push higher, the first thing I'm looking at is, okay, what is above me? Where are my draws? We have this buy side liquidity here. And then we have all this stacked low resistance liquidity above us, right? So if given the opportunity, I am convinced that we are going to draw to all of these draws. And so that's exactly what happens, right? Price ends up pushing towards those draws. So that is what low resistance liquidity is. It's just trendline liquidity. So if you see a bunch of stacked highs or stacked lows, you would just see it as this. Okay, this is low resistance liquidity. So if price is given the opportunity to push lower, we are likely going to take all of that liquidity. And then we might have some rebalance and some continuations and so on. That is the basis of low resistance liquidity. It's simple to understand. It's just a bunch of stacked highs that were never taken, and they're kind of just in the same area. So what can we expect? Price to return to that area. Same thing here, form a low resistance liquidity, right? If price is going to first trade lower, then I would expect price to come, take all the lows, right? Not just one low, not just take this and then move. I would expect it to first trade lower, take all the lows, and then have its move. And then what's on the opposite side? All this low resistance liquidity. So that's how I would see it, right? I would use this as an area where I can see price come, take the low resistance liquidity, and then have its move, targeting the liquidity on the opposite direction. Low resistance liquidity, it's that simple. It's just trend line liquidity. If you see a trend line, you see a bunch of stacked highs or a bunch of stacked lows, you would mark that out. Okay, now that we got LRL out of the way, I'm going to be covering draws on liquidity inside these sessions. So for you guys to first understand what that means, you need to understand the sessions. There is the Asia session, the London session, the New York AM session, the New York lunch session, and the New York PM session. And there are specific times for each session. I put already a tab in the Discord for you guys to go to and see the times there, but I'll be covering it briefly in this video. To see the times, you guys can come to this indicator and look for ICT kill zones plus pivots by TFO. That's going to help you see the indicators. You can only see it on the 30-minute or below, and that's fine. That's all you need to. I come to the hourly. I can't really see the sessions. So I go to the 30-minute time frame, and you can see when these sessions start and when these sessions end. So yeah, once you guys get that indicator, you'll see all the session times here. And I'm sure you guys already have an understanding of the session times. So what I'm going to be explaining are the draws. So let's start off here at the AM session as if we were going to trade this session. So the New York AM Stock Exchange opens at 6:30 a.m. And so this would be the 6:30 low or the New York AM low, right? New York AM low. And what did New York AM do? We came down and we edged Asia session low. These are all the session draws. These are lows or highs that were not taken during the session and were left behind. Similarly here, we leave all these stacked session highs, right? We got relative equal highs here. We have the London high here. And these are all draws that price is likely to come to. Oh my goodness. You can see here, price ends up running all those draws on liquidity. And similarly to the example I gave earlier, where price is not just going to take one draw, it's most likely coming to take all the draws before having either a reversal or a rebalance in price. Here is the 6:30 open. New York opens. If we're going to push higher, where are my draws? My draws are these session highs, right? The lunch session high, PM session high. We have Asia high. Yes, it was slightly taken, but there is a high here. Call that relative equal highs. The London high. So off open, we see that pre-market to Asia open it has been trading lower, and so we trade into this range, and from here, price trades higher. Right, constantly filling gaps, trading higher. Lunch opens, right, volume is pushed into the markets, and so we can anticipate for a move to continue higher. And that is what I want to emphasize when it comes to the sessions is pre-sessions, so pre-markets, time outside of the sessions, we're going to have very low volume and markets are going to be very slow. You can see after New York AM rebalanced and pushed higher, we ended up chopping around for a while. And then New York lunch opens and volume is put into the markets and we get our pump towards our draws on liquidity. Another thing I want to emphasize, after we have a large move like this, where a lot of money is put into the markets, we're likely going to chop around for a while, and you can anticipate the sessions that delivered, for example, New York AM and lunch delivered to the draws. So the session after is likely not going to have anything to really do except generate more liquidity for later sessions in the day or for the day coming. You can see New York PM sort of chopped around, didn't do much. Didn't really do much. It just generated liquidity. See what it's doing, it's creating highs. Because you see previously we got rid of these highs. So this is just generating some liquidity for the sessions to come. Try to skip through this on the 30-minute. Here, Asia likely to do the same. London likely to do the same. And then the next day opens, and what does price do? New York AM opens, and we have all these draws to target. But that wouldn't have been possible if these sessions didn't generate liquidity in the first place. That is why a healthy market has some sessions that chop around and other sessions that deliver to those draws. Otherwise, if all sessions deliver draws, it would just be a straight line, right? We need sessions like this, like a London session here in this example, to chop around and do absolutely nothing but generate liquidity so that the later sessions can come and target those highs, right? We have London high as a target. We have all this LR here as a target, right? 1, 2, 3, all these stacked highs. That'd be LRL. We have Asia high as well. And so what does New York AM do? We open lower, we rebalance some sort of range, and then we deliver higher, right? Learning to stack our confluences, fair value gap, and we continue to these draws on liquidity. Again, guys, without draws, you don't have a bias, you don't have a direction. So these sessions are very helpful to see where you can move towards, right? So that kind of explains that. We specifically usually trade the New York AM session because, as you can see, this is the New York Stock Exchange open, and there's more volume getting pumped into the markets around this time, and it's likely to deliver to the draws of previous sessions, right? Overnight, what does London do? It chops around, and then New York AM typically delivers to those draws, and that is how the markets move. So I hope that makes sense when it comes to the sessions, guys. That session liquidity, these are kill zones, when to be trading in the markets, and then what times to avoid trading the markets. You don't want to be trading outside of the markets, right? Because it's typically setting up for market open. And you can see in between all these times, there's not really any clear direction or draws on liquidity, right? Before Asia session, what did we really have? There's no draws over here previously, nothing. So what can you target out here? Absolutely nothing. So we typically wait for these sessions to generate liquidity and for the session after to deliver those draws. I hope that makes sense, right? Without draws on liquidity, we wouldn't have a direction to trade in. So similar to LRL, we want to target all the low resistance liquidity above us. So if we were to only take one draw on liquidity above us, it wouldn't make sense, right? We want to try to target all of the draws because they're all stacked highs. Similarly, just because we have an Asia low doesn't mean we're just going to take that low and then start reversing. We are likely doing something much bigger. So you guys will watch the fair value gap video first and then maybe come back to this, but I'm going to cover this briefly and I hope you guys understand it in the later videos. Let's use this as an example. This is New York AM. This is the session we trade. And let's say London is the draw we are aiming for. Well, let's see. Previous day high is this here. So we would mark this previous day high because I'm on the daily time frame. Let's see the weekly, not much on the weekly. 4 hour. Here I'm on the 4 hour. It looks like we're holding this gap. I'm on the 1 hour here. And on the, you guys could clearly see this low is standing out. This low sitting inside this fair value gap is standing out. This would be called an intermediate low. So instead of just clicking the indicator to see the sessions, you guys are now tying the fair value gaps with buy side liquidity and sell side liquidity and kind of seeing where price is likely to have a reaction out of. For example, this is sell side liquidity if you guys remember the previous videos, but it's sitting inside a fair value gap. So this would make a lot of sense for price to either trade lower than deliver to previous day high, or if we have already swept previous day low, then we're likely going to start delivering higher. Now, these intermediate highs and lows, this is a 15-minute bearish gap. And what is sitting inside that 15-minute bearish gap? A high. I would mark this high and call this an intermediate high. Why? Because it's sitting inside a 15-minute bearish fair value gap where I want to see price come to. And if there's a draw there, that just stacks another confluence. So price is likely to come to this and take out this high before having its move. I wouldn't anticipate price to just come and tap this fair value gap and leave this drawn liquidity behind, right? If we are bullish, I want to see price come, take this high, and if price is truly going to the previous day high, disrespect this gap and continue to this draw. Now, what does that look like? Let's skip through. Price comes, taps this gap. There might have been traders taking shorts here, but what do we know? That this is the intermediate high sitting inside the 15-minute gap, and we're likely going to take that out. Right? Price takes that, go back to the 15-minute, we inverse this 15-minute gap, disrespecting it. And so, what can we expect? Price to continue delivering higher to this low resistance liquidity and previous day high. You guys see, if I didn't have the sessions marked out, I would still anticipate for previous day high to be the main draw, and I would ignore this London high, right? Because I'm already seeing it as low resistance liquidity that's stacked right here below previous day high. And so I would not stop until that is taken. Previous day high, your order sitting around here, right, with confirmation. And price is likely going to continue until previous high is taken. And you can see price didn't stop at London high. It continued until previous high was taken. So typically, I don't mark the session highs and lows. You guys can get some practice with that. I mark them as intermediate highs, intermediate lows, or I know I've stacked enough liquidity and I know price's direction. So I don't need to mark every session high and low. I'll simply see this as low resistance liquidity and previous day high as my main draw. And I doubt price is going to stop at the session high until the main draw is taken, which is previous day high. Similarly, how I won't expect price to just come and take this buy side liquidity when there's all this stacked liquidity plus previous day high above it. It's likely going to come and take all of that. It's similar to the example I gave earlier, where if I'm going to rob a bank and there are multiple bills around me, why would I simply grab one and walk out the bank? I'm most likely going to target everything and then walk out the bank. So these institutions, they don't just go for one small draw, they're going to go for the main draw. Previous day high here, for example. I hope that makes sense. I know this one was a little confusing, so just what I wanted to explain with the intermediate highs and the intermediate lows was just kind of how I see the markets and how I don't necessarily use the indicator to see these session highs and lows, but you guys can and get some practice with it, right? It's just the difference between having more stuff on the chart compared to less things on the chart and just simplifying it in my own manner. So yeah, low resistance liquidity, these session liquidities, or you can see them as intermediate highs and intermediate lows. You see how this previous intermediate low I marked is Asia low. So you don't really need the indicator. You can just kind of see, okay, I see this is buy side here, buy side liquidity, buy side liquidity. Let's see, this is a trend line. So price is likely going to deliver to all these draws and our main prominent draw being previous day high. But I hope that covered liquidity. But good luck, and I hope this is helping you guys.